This could change everything. 911,000 jobs erased. Gone. Something big just dropped and it could shake the markets. The Labor Department quietly admitted that the U.S. actually created nearly 1 million fewer jobs than we were told. That means Joe Biden's job numbers may have been seriously inflated. Now Wall Street thinks this could trigger the biggest rate cut we have seen in more than a year. Today's report showed 911,000 fewer jobs than originally reported. That is the largest downward adjustment in more than 2 decades, and it paints a much weaker picture of the economy than anyone thought. If the labor market is this soft, the Fed may have no choice but to slash rates, big and fast. Was Trump right? Did Powell wait too long to cut rates? Or did Biden and his administration inflate the numbers in his final year in office? If that's the case, thank you, Joe Biden. Let's dig in. First, what is a benchmark revision? So each month, the BLS estimates job growth by survey. They send these out to around 122,000 businesses, but surveys have limits. Not everyone responds. Today, only about 40% of those surveys get filled out. So once a year, the BLS anchors those estimates to harder data. And that harder data is the quarterly census of employment and wages. And unlike surveys, the QCEW covers 95% of all jobs using unemployment insurance records. So these benchmark revisions, they compare the monthly survey to this census. It tells us whether the estimates were accurate, and oftentimes they are not. In June, payrolls were first reported as plus 147,000 jobs. After 2 revisions, the gain flipped to a loss of 13,000. Since February of 2022, total payrolls have now been revised down by 1.1 million jobs. This year alone, 482,000 have been deleted from the official record, and that was before today's adjustment. But here's the important part. This revision only covers payroll data through March 2025. That means it reflects the final stretch of the Biden era, not Trump's current policies. These numbers show the jobs reported during Biden's last year were massively inflated. 911,000 means monthly job growth was not 150,000 jobs like we thought, but closer to 90,000. That is a sign of a labor market that is cooling fast. This could have a huge impact on the Federal Reserve's interest rate decision later this month. You see, the Fed has 2 jobs. They refer to this as a dual mandate. They are responsible not just for keeping inflation tame, but also ensuring a healthy labor market. So if inflation is low, but we're losing jobs, they failed. If we're gaining jobs, but inflation is ramping up, they failed. So they have this delicate balance they try to maintain, albeit poorly, but nonetheless. So even though inflation is not quite as low as Powell would like, now he's looking at a weak labor market. And this will force him to act. The market is already pricing in a 25 basis point cut at the next meeting, but many investors now see a 50 basis point cut or larger. This would be a positive surprise and send stock prices much higher. And look, we've seen this play out before. None of this is new. In 2008, revisions erased more than 900,000 jobs, proving that the recession was far deeper than initially reported. By the time the Fed reacted, it was already too late. And the risk is repeating that mistake again. During COVID, payroll surveys undercounted job losses again. Revisions later showed the collapse was much deeper. Policy had to be scaled up dramatically to match the reality. Rates were cut quickly and aggressively. Revisions have a history of flipping entire narratives when it matters most, and it is a credibility issue. Listen, Federal Reserve governors are not bankers, they are not traders, they are dweeby little academics. They are economists from Ivy League schools who go to dinner parties in tweed blazers with elbow patches. Their reputation is everything. Getting it wrong creates a credibility issue. And after that transitory inflation they forecast after COVID, they can't afford another one. After May and June's revisions, Trump accused the BLS of rigged numbers. He fired the commissioner. When asked if data would be credible, he said the real numbers are whatever it is a year from now. And economists agree. A July poll found 89% of economists view U.S. data reliability as a, quote, big problem. Nearly half said they were very concerned. Many no longer trade on the initial payrolls. They wait for revisions. And consumers see it too. Last month, in August, 63% of Americans expected unemployment to rise in the next 12 months. That's the third highest reading since 2008. Historically, this survey has predicted downturns, hinting payrolls could soon print negative 50, negative 100,000 per month. Meanwhile, the global rate cut cycle is already in motion. There have been 88 cuts worldwide in 2025, the fastest pace since 2020, and the third fastest on record. The ECB, 4 cuts. Bank of England, 3. Canada, 2 cuts. Switzerland's already back to 0%. Us, the Fed, 0 cuts this year. Powell has stayed on hold even as the rest of the world eases. And since today's revisions revealed that job growth before March 2025 was overstated by nearly 1 million jobs, the Fed has no choice but to finally join the cutting cycle. The broader jobs picture is already ugly. U.S. employers have announced 892,362 layoffs year to date, the most since 2020. Excluding COVID, of course. This is the worst since the great financial crisis. August hiring plans were the lowest since 2009. And make no mistake, Trump will blame Biden. He will blame Biden and his administration for these job losses. And folks, he's right. At the same time, he'll attack Jerome Powell, saying he was too late to cut, just as he has done repeatedly. The politics will continue to be as fierce as the data. But the bottom line is this. Benchmark revisions are not a sideshow. They're the truest test of U.S. payroll data. And this year's revision only covers April 2024 to March 2025. Today's numbers fully erased much of Biden's last year job gains. This has now triggered even more of a credibility crisis and now will push Powell and his cronies at the Fed into a deeper 50 basis point cut. That's my prediction. Thanks, Joe. Now, if you haven't already, be sure to subscribe to this channel. That way you'll see these videos pop up in your YouTube feed. You won't miss another update, and I'll see you in the next video.